Hello and welcome to Commodity Champions. I'm Manisha Gupta. Well, today our focus is on the world's biggest mining company in terms of market value, the BHP Group. With a market capitalization of more than $150 billion, this company operates across commodities like iron ore, copper, coal and petroleum. The company's iron ore production for FY23 surged a percentage point to more than 250 million tons, while its copper sales for the same period jumped 12%. Joining me now to discuss the company's outlook for various commodities is Vandita Pant. She's Chief Commercial Officer, BHP. Vandana, hi. Thank you so much for joining us here at CNBC-TV18. And you are in India, traveling India and Delhi and Mumbai, meeting ministers, big companies. What are you picking up in your conversations with everybody?
Yeah, it's been reconfirming our view, really, Manisha, being here, because we've had a very positive outlook on India, not only in short term, but really mega trend for next few decades. And during this visit, that is getting reconfirmed, both in terms of confidence of people we are talking about in their own business, in the sector, in the overall trajectory and momentum that India story has, and in fact seeing the progress on the ground. Talking to the ministers, I met with the Minister of Steel as well as Minister of Commerce and Industry, as well as our biggest customers in Delhi and in Mumbai. And overwhelmingly, first, real focus on growth, enabling the environment so that investment can take place, seeing the momentum on the ground that our customers are feeling, and we see that in our business with them as well. So I would say the sentiment is positive, confidence in short term to get things done and delivered very high, be it for our steel making customers or be it our copper smelter customers, but equally longer term trajectory for India continues to be positive, and that's something which BHP has had a house view on in a very positive way for a while, and it's been great to see that sentiment is very much on the ground. Both plans for expansion, growth, very credible, balance sheet strengths looking good, enabling environment from a policy perspective, very positive, but equally the kind of demand, be it the usual drivers of demand that we think of in our commodity space, being continued construction, infrastructure, even manufacturing, which is starting to take off, all very solid and positive.
Vandita, last time I spoke to you, I remember you saying that India is an important partner for you, and there is so much that India does with BHP in sense of copper, steel, other commodities as well. So standing where we are right now, with so much has changed since then, what's your focus within India?
Yeah, India is a very strategic, very long-term and long-standing customer of BHP. And what is absolutely interesting is that the focus of commodities that BHP has completely complement the commodities that India and Indian industry needs and does not have self-endowment for. So, for example, if I were to take metallurgical coal, which is an essential ingredient to make steel, which is increasing in India exponentially and will continue to increase, BHP provides almost 40% of India's met coal requirement. But equally, India is very big for us. Our high quality met coal, which gets produced in Australia, 40% of our met coal comes to India. So both partners, in a way, really important. We are also the #1 provider of copper concentrate to Indian copper smelters, which is really important. I think we provide almost 20% of a copper concentrate to Indian smelter from our Chilean operations. So it's a relationship which is symbiotic and completely complementary. And what I would say as well, Manisha, is that we are also growing in potash in Canada. It is one of the fertilizers and really important going forward because it increases the yield in the crops. And again, potash is something that India needs to import. So from my perspective, as India continues to grow and as BHP continues to invest in what we call future-facing commodities, we will be complementing each other, and it will be great to be able to support India's growth story through our portfolio.
Clearly. I will take one commodity at a time, and I'll start with steel because that really stands tall among all. And we've seen steel prices continue to be quite volatile, but within India as well, the steel production seems to be increasing right now. And as you pointed out on met coal requirement when it comes to the industry there, what's your sense on how steel really seems to be doing? How are you looking at availability and price view on that too?
Yeah, sure. So steel, as you know, remains the traditional building block commodity to enable growth in living standards, urbanization, and development of the country and in the world. So continuing growth of steel is very much the trajectory. It's been remarkable to see, actually, that last year, India's production capacity is around 125 million tons. And just 2 years back, it was around 100. This year, we think it will be 134 million tons. So from a trajectory perspective, by end of this decade, India could be looking at, I think, aspiration to get to 300 million ton of production capacity. The way we look at mega trends of multi-decades, from BHP perspective, we think it's very plausible, highly plausible, for India to be 450, 500 million ton steel production by 2050, which is incredible growth, given the base is now 125 million tons. So really will continue to increase. From a supply perspective, as I said, met coal that we supply will continue to be an input. From a margin and pricing perspective of steel, I think actually India is one of the higher margin steel producing countries in the world. If I were to compare it to China this year, for example, China steel mills margins have been negative to maybe $20 a ton or thereabouts, whereas Indian steel mills, the most efficient and effective ones, regularly do between 80 to 100 million dollars per ton kind of margin. So the competitiveness of Indian steel industry, and of course, the big backbone of domestic demand is fabulous drivers and triggers for growth for a very healthy and profitable industry going forward.
All right, those are very positive numbers coming in for steel, especially in India, where you said that the margin in India is much higher than what China seems to be really dealing with right now. But I want to shift to copper as well, and that really seems to be a favorite of all investors and academicians as well. The prices clearly have been volatile. For this year, we are still trading in the negative. But what's your sense? Because copper is the metal of the future. Every report that you read on renewables or energy transition, copper has a mention. Here as well, what's your sense on availability going forward?
Yeah, you are absolutely right. Copper is the darling of everyone, and for BHP as well. We are one of the largest copper concentrate producers in the world, but we are classifying it as future-facing commodities. And it is so because, as you know, our traditional way of life, copper supports lots of things. But equally, as the world decarbonizes, anything that the world needs for decarbonization, copper is a critical element of that, be it EVs, which take 3 to 4 times copper than a regular car, for example, or be it solar power, everything gets powered by copper. Now, interestingly and challengingly, actually, the copper supply is getting constrained. We think that by the end of this decade, 2030, the world will need roughly net 7 million tons more copper. Today's copper production would be around 25 million tons. And that is quite challenging because that requires capex of almost $250 billion, $250 billion. And the supply of copper is becoming constrained because of environmental clearances, water scarcity, and the mines are getting deeper and more difficult to find. And hence, the trajectory of supply still requires a lot of investment. From a demand perspective, to give you a sense of where the numbers go, Manisha, if we were to assume the world of 1.5 degree world with the climate change and aspiration to get to a right kind of temperature, we think in next 30 years, the world will need double amount of copper than it did consume in last 30 years. So that's the long-term trajectory. But if I were to come to your question of prices as well, in here and now, I would say copper demand and supply is almost balanced. There are lots of projects which had got delayed because of COVID and now have come on stream. So next 2-3 years, more supply will come into the market, which means there may be a little bit of surplus. But by end of, let's say, 26 odd and end of this decade, a structural deficit opens up for copper. And that is what miners will have to fill in, and will need to make sure the investment goes with the right places who also can do it sustainably. So very, very positive, I would say, on copper long term. Short term, almost balanced market.
All right. So near term surplus, but longer term there's going to be a deficit, and that perhaps could drive the copper prices on the higher side. Vandita, do stay on with us. It's time for a short break. Don't go anywhere because the discussion continues when we return.